Traders Profit Club, talking to another video. Today we're going to be talking about trends and being able to maximize liquidity and profit off the trends and market structures. So we're also going to talk about inflation as well and see where price is going to be coming into the near future, and also seeing where the big drops are going to happen in the market. So I'm really excited for today's live stream, you guys, and we're going to go straight into it. So what happens when we see trends? We have to see a lot of retracements. And what we mean by retracements is that when the market breaks and you see like a support, so say that we can look at previous market price, and we can see that obviously that Great Britain pound was in a micro trend because we're on the 1 hour chart. We can see that price is moving up, comes back down, and it makes swing highs and swing lows. And we call these lower highs and lower lows. And then we can just do this one more time. So when we see these lower highs and lower lows, we can be able to now understand that this is possibility that it's going to be price or in price. So for you that don't know, is that the market trends only 50% of the time. The other 50% of the time is consolidation. So when we're seeing consolidation, right, we can look at a higher time frame. And we all know what consolidation is. It's basically when this is consolidation, this isn't necessarily in a trend, and then this isn't necessarily a trend, this is basically still on a reversal leg. So when we start to see a trend, it's making lower lows and lower highs. We can say that this is the first drop back of a trend, right? We can say this is the first lower low, right? And this is the lower high. So we can now say that this is possibly the beginning of that bearish trend, which was started in November, right? So this is the micro trend right here. We see where the market is now having those formations. So that's how we are understanding. So once you understand that the market's only trending 50% of the time, you have to take into consolidation into consideration. So without consolidation, there isn't any market. So the market is basically built up off consolidation, because that's when all the liquidity and all the market basically orders have been filled. And once these market orders have been filled, then they get to move price, where the banks and institutions move price into a certain area. They move it wherever way is, fits possible to their books and also for their clients. So that's when you see the price moves at a very, very fast rate, because the market doesn't go very slow. So when the banks move the market, it goes really quickly, right? So as you guys can see right here, this is when the Brexit was happening, or they were supposed to have the actual Brexit agreement, but then it didn't go through, and then guess what happened? All the banks and institutions short the market. So that's why we saw that huge spike to the downside. And even on the 4 hour chart, that's over 300 pips. So we're seeing that huge spike to the downside, and then automatically they rose price back up. So this is something that I take into consideration when I'm looking at trends, because now not only is this possibly the end of this micro trend, in my opinion, is because I also see this as a stop hunt, and we'll go into stop hunts and what exactly a stop hunt is. I know a lot of you guys know what a stop hunt is, but I want to make sure that everybody understands what a stop hunt is. But moving forward, we can see that now price is showing this consolidation area, and then we just saw that downwards spike to the low, right? So this is where they made their move. And then once they made their move, they now are going to either reverse price and move higher to stop out all of these traders, because most of these traders are still in the position, right? They're in this area of consolidation. They entered at that area. So now that enter consolidation was already dropped out of, or it broke out, that was possibly a false breakout. So I'm going to show you guys what this means, because when I talk about trends and trend breakouts, this can mean that you can catch the trend on a reversal, right? So I'm a reversal trend trader and a trend trader as well. And I'm going to go over a couple examples with you guys and show you guys exactly what I'm talking about. Hey, how's it going, NYC? Good to see you again. So when we're talking about this, you guys, I want to be able to understand that there's a thing called a false wedge breakout, right? So these false wedge breakout happen during a lot of the time during a lot of fundamental data. So this fundamental data that we see, let me just find it real fast for you guys. All right, perfect. So when we find this fundamental, or see the fundamental data that comes out, it could be anywhere, then they have this thing where they induce a response. So a lot of these people that are scalpers or maybe breakout traders, they don't have the overall they're not making a lot of profit, because a lot of the times those breakouts aren't really to that side of the market that it's breaking out to. It's usually a false breakout. So a false breakout are a very highly profitable formation in the market. They formulate around the end of the month or during big news events, such as non-farm payroll, CPI, GDP, unemployment rates, and highly effective market data reports. Reason for false is because the market gives you time to follow the breakout direction and giving you percentage gain, right? So this is what they did. They basically, it was actually during a news event. This was earlier this year, and I took a screenshot of this. When the market made that consolidation, right? Just like how price consolidated, as it's consolidating right now here, right? Price consolidated, and then now it broke out, just like how it did with this right here. And then they gave you time to get into profit, and then they reel you back in. So this is what a lot of the market makers and liquidity providers, they do this because it's very, 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 very inducing. I mean, it's market manipulation at its finest, but not just that, but it's just a way for them to, get all the people out of the market that they know aren't, understanding. There's two books in the market. There's an A book and a B book. And A book traders are the traders like that the broker will be like with you. They want to make sure you're making money. But B book traders, they hedge against you. So they basically want you to lose money, right? So this is a huge thing. These false breakouts happen all the time in the market. And not just that, like when you have these market breakouts, they basically are showing an area of support, usually on the outside of it. So right here, you can see the support area was coming into 112 flat. So here, we're going to look for a support area that now has the area. We can see that it's 125 flat, right? So a lot of these times, these false breakouts happen when the market at a psychological level, but not just that, at an even flat number as well. So like we talked about, consolidation and then a false breakout, and then they shoot price the opposite way. Because the reason they do this, and they do this all the time, is because they have to. I mean, it's just you're hitting people's stop losses. It's just part of the business. People have to lose for people to make money. That's just how the market works. So when people lose money, other people are making some profit. So that's why a lot of these times the market has these very, very tricky ways of going about how how they move the market. And obviously the algorithm that the market's played on, they're trying to make it so it's not really that predictable, right? They switch it up. They have different ranges per month, and then you'll have different setups and different structures on a season, right? You'll have basically a different how the market works in different seasons as well. So they like try to make sure that not everybody's like just cashing in all the time, because then they wouldn't make any money. Electronic connect, or I would say that the brokers that give you the money, they wouldn't be in business anymore, because people would make too much money and they would bankrupt them basically, right? So they have to make sure that when you're trading on the emulated market, right? Because when you're trading on a broker, you're trading on an emulated market as of when you open an account with Olanda, Forex.com, TraderView or Trader's Way, and other Dukascopy if you're in Europe, right? And so forth. You're trading on an emulated market. It's a market that's basically been simulated into their broking structure. That's why people are saying, oh, why does my charts look different from yours on your charts from your broker? Is because they still have to stand by the guidelines of how the market is structured, but the way that price is fluctuation by percentages, they don't necessarily have to abide by that. So it's a little different. I know that a lot of people haven't, they didn't know that. So it's interesting. Max, how did I come up with the USD CAD signal? I can show you right here. So, and now before I go to that, Max, I just wanted to reiterate. So that's how it really works, you guys. That's how a lot of people lose a lot of money really quickly, and it's because they are being into a reaction, right? They just react so quickly instead of responding, right? And then that causes a lot of people to lose profit. So how I did the USD CAD trade was pretty simple. So what I use, Max, is called an M and W formation at structure highs. So when I see structure high formation, especially if the market has been trending, like as you guys can see, the market has been trending since October, or it's actually been trending for a while, but I'm saying the last leg of this uptrend. I see that when the market has been trending for a long period of time, especially if I see price making higher highs, but then not also making the lows, and it comes back and it hits formation, that's when I know that the market is going to go to a reversal. So that being said, we call them the M and W formations. So when we see M and W formation, we look for 2 hits to the high, but then they obviously are rejected at that high, and usually at a psychological number. So as you guys can see right here, it was 134 flat. That's where we saw that rejection, and we saw the wicks, touch at 134,500 was like the highest point. So we try to find, a perfect entry. So as for this trade, I found a perfect entry for this information as we're still in this trade. But right now, that's how I find these trades for USD CAD and USD JPY and all these other pairs, is that I use the specific formulas that I showed you guys over and over and over again. So I use it on smaller time frame, higher time frames, and so forth. So like, obviously I'm not trading on the 4-hour time frame where my entries aren't. I look for a shorter time frame. So right here, because it gives me more a dynamic entry, and not just that, but I see more of the structure of price, right? So right now is a huge market point right here. So as you can see the M formation form just at the same time you can see the at the 4-hour formation. So I hope that answers your question, how I find those different positions in the market and how they're structured. Yeah, no problem, Max, of course. So when I find these formations, I usually go to the the 15-minute chart, and I see that the same formations are applied, and then I now am able to see where the price is possibly going to go. So what I do is that I look at previous structure, because previous structure leaves clues. So I like to see where the lowest of the low of that previous retest, and you only do this when you see a market correction, right? So if you're trending on a market, you don't do this. You're looking for a simple way to trade this. So I don't want to go too in depth with this, because I do want to talk about trend trading and also learning how to trend trade the best way. So we're going to go get back to this, and I'm going to show you guys exactly what I'm talking about by finding positions to trend trade. So we're going to take the USD CAD for this example, because we already have it up, and we're going to just break it down step by step for you guys. So this is how it works. So we use a formulation that is called the W formation when we see a bullish market, right? So as we can see that if we were to look at the daily time frame, you usually want to go to a higher time frame to see how trend the market is, basically what position the market is. So like we talked about previously, the market is trending 50% of the time, and then it's consolidating 50% of the time. So as you can see, in the macro perspective, we're not in a trend, right? It's more of a consolidation area. We see that this area from here to here is pretty much a consolidation market area. It's not necessarily making a trend. People get this mixed up, saying, oh, well, it is a trend, it's making lower lows and lower highs. But no, you have to be sustainably making those formations. If we're looking at a micro perspective, which a lot of intraday traders do, then yes, we are in a micro trend. But as of right now, I mean, the last trend that we had was going from 2012 till 2016, right? And then ever since then, we've been more in a consolidation range area between these lows and these highs, between 12400 and then up to 137,900, or we can say 13800 flat. So this is more of a range. So like we said, consolidation 50% of the time. Now we're going to look, where is the market going to trend out of? Because there's 4 market structures, right? And we're going to go into the market structures, but I want to show you guys that this is literally all consolidation. But as of right here, from a micro perspective, we're seeing higher lows and higher highs. So now we're looking for an uptrend. So how do we define when an uptrend is happening? So we use something called a peak formation. So a peak formation in the market is simple. All we try to do is find a formation that looks at like an end of a trend and then we look for that reversal. So then we see that peak formation happen, and then after that we go to that direction. So I'm going to show you guys how that actually looks, and then I'm going to give you guys some more content as well to show you exactly how that works in the market. So give me 1 second. Let me just find it for you. There's a lot of information here, guys, that I'm going to go over. Okay, so peak formations, so market anchor leg and peak formation, lows or highs. So a peak formation is pretty self-explanatory, you guys. So when we're looking at price, we want to look for a formation that kind of looks like a peak, right? How it's kind of exhausted and it hasn't retested that previous level of that peak. So what I mean by that is that the market makes a peak formation and then it doesn't retest that level of that low. Because if it doesn't retest that low, we know that that is the bottom of the end of that trend, right? We're thinking of it from a micro perspective right now. So we can take the drawings away and show you. So we were right. This is a fall, and then this is the reversal. We see that this area was the peak, and then this area is called a micro anchor leg. So this micro anchor leg is establishment where price is no longer going to break previous lows. So then now we can take buy positions because we can see that formation showing the lows in the market. So usually we try to catch that second anchor leg, or the first anchor leg, excuse me, at the psychological numbers and as you guys can see right here, it's right at 1230 flat. So this is a perfect confirmation that the market is now in a uptrend compared to where it was previously when it made that bearish retracement. Okay, so now we're looking to catch the buy order. So we're going with the trend at this time. So we want to look for something called M and W formations at this time. So this is one way that we find how to make profits at the lowest areas of that trend. So a lot of people ask, how do you find positions where you're trading or you're catching positions at this high peak, where the market literally was at the highest peak before it started to consolidate and go down? It's because of these formulations that we see, these M and W formations. They're on the smaller and the higher time frame. So if you can be able to maximize this and be able to put this in your trading strategy and use the other elements as well, you'll be able to find the key entry points, and these entry points will now be able to establish more growth. So hey, how's it going, Michael? Good to see you. So that being said, you guys, how it works is that we're going to go back into, let me just go back to where we were, and then we'll be able to do it. So perfect. So as we saw that this was the last leg, we try to see the same thing again. We go into price, and then now it makes literally the same concept as what we saw previously. Peak formation, and then price doesn't break. You can call this an inverse head and shoulders. It doesn't always have to be an inverse head and shoulders though, you guys. It's just looking for that peak, looking for that area where the market is. Bitcoin did the same thing, right before it made that reversal to the downside, right, in January of last year. All markets do this, right? It made that peak formation, the peak formation. So when we're talking about the peak formation, peak formations are basically areas where we're looking for price to, so let me just go to it real fast, you guys. So when we're looking for peak formations, we look for things. We look for a peak formation at the end of a trend. Wait for the full formation to be complete before entering into a trade. And then they can also be sometimes head and shoulders, just like I told you guys earlier. They usually form at weekly, monthly highs and lows. Okay, so I want to tell you guys that that's really important. When these peak formations form, they usually form around the weekly and monthly high or lows. So we'll look if that is correct. So right here, we can see that this was the 6th of December. So this was the first. Or actually, this is the 10th right here. So we're looking at this USD JPY. Actually, this isn't a good one to go over because we're on the 15-minute chart. Let's go to a 4-hour chart and let's see what we're talking about here. So as you guys can see, it happened just as we talked about. So this is the peak formation, right? Like we talked about. And look at the date when that happened. This happened on the 3rd. of the month. So this is the beginning of the month. And just like we talked about in the thing, look for it at monthly highs and monthly lows, weekly highs and weekly lows. This is going to be the monthly high of the market. So this is the monthly high of October. So that's where you want to look at these formations. And how do you find the weekly highs and weekly lows? It's pretty simple. You look at structure and price, and when structure and price goes into a certain direction and it doesn't retrace that area, then you know that that's going to be the high or the low of the week. So then you map it out, right? So I'll show you how that looks. So when we look at price, we want to be able to go over how it looks. So consolidation area right here, right? Just we talked about the market trends 50%, and then it consolidates 50%. It's trending 50%, consolidates 50%, trends 50%, right? So that's how it just works over and over and over again. So that being said, we are now looking for an entry to obviously go long, to go short, but we're looking for a setback or retracement. So we can see that this is a macro M formation, right? So if we look at price, and we look at how price is being formulated, then now we can see that this was the high of the month, of the full month. So now we're going to use this high of the month as a structure, because now we know that market is probably not going to break this area for a while, okay? So as you can see, the market tried to retest in November, right? Tried to retest that level. It obviously was rejected. So we use this as confirmation. So when we see this area of structure or price, then now we can establish that the market is possibly going to go into a different direction of trend. So when we're looking for our orders to buy and sell, we have to understand the box, right? We have to look at both the ceiling and we got to look at the floor, because then now we can be able to see where price is going to go from that direction. So that being said, we can see that price consolidated here and then it tried to retest that previous high. So once it did that, sorry, I don't want me to, let me put on the indicators. Sorry, sometimes they fluctuate. And this is perfect to show you guys what I use as well. I use the 50 and the 200 EMA, and I'll show you guys why I do this as well. So how do I find the breakouts of a trend, right? This can be a micro trend, this can be a macro trend. They're both universal. They both work on both perspectives. So it's how I catch them is a key element. It's using these things called W and M formations. So the market literally makes these formations all the time, and they make them at the moving averages. So the reason why I use moving averages is because I do use them for trailing stops as well and angular support and resistance, but I mostly use them to find my W and M formations because they always form at the moving averages. So as you can see here, it makes a W formation at the moving averages, right? These two lines are the 50 EMA and the 200 EMA we just talked about. So I want to show you guys exactly how you can use this to use it as a breakout indicator to trade the markets and be able to make profit, right? So first, for the people that don't understand what moving averages are, it's pretty simple. It's moving averages are basically exponential structure. It's basically a lagging indicator, and it helps basically predict the momentum and the movement of price. So that's what a moving average is. And then when we use these M and W formations, they are confirmation of a retracement and reversing the opposite direction, right? So this could be when the market makes a swing low. And we're talking about when we're trending, right? When the market makes a swing low, as it did here, from here to here is a swing low. You see how the W formation was formed at that swing low? Because now that is establishment of a buy signal. So then now we look for that formation, and we only do this when we see that second leg formed, right? And I'll tell you guys why that soon. So we only look for when the second leg is confirmed. And we only want to actually do it after we already see about 25 to 35 pips to that second leg formulated, right? That's when we actually want to get into the position. So moving forward, we saw that the second leg was formulated. And then now we want to look, where is price probably going to go to? Because look at structure, look at previous structure, price leaves clues. That's why it's so important to know what the floor and the roof is, because then now you have a boundary of where price is going to go. You're not just trading out of nowhere and not knowing where the resistance and support areas are going to be, because where market has gone, it loves to retest all the time. It works every single time. Bitcoin's doing it as of right now. You guys know, right? Bitcoin was started at, very low levels, went up, skyrocketed, and then now it's back. It loves to retest the same levels it previously was at. So that being said, we see that this was, again, the peak formation, which is at the top, and it always happens at not the beginning or end of the month. Don't get that confused. It happens, is usually the high or the low of the month. It just happened for this sake that it was the beginning of October, right? So the market made that peak formation, and then now it made that low formation, or the market made a W formation at the lows. So now we're looking for that buy at that low, right? Because we're still obviously looking to go long, right? This is just a retracement. So now we can see that this was the confirmation that we needed. We saw that second leg. We saw that this is an area that we would put our buy order. We would put our stop at this previous low. We would usually put it at 750 under that area. And then from there, we're going long, right? You can take this trade and obviously get out at previous structure, because you know it's going to have a retracement before it's going to go higher, because most markets are always going to need a retracement before it goes higher. It just needs pressure to build up to move forward. It's just how it's just how it works. So it's very important to not get feared when the market retraces, right? When you start to see a huge retracement, then obviously, take into consideration, and you should already be having, trailing your stops at this area. So that's where the market you should already be in profit. So the market tried to retest this previous high, okay? So it's very important stuff, you guys, because we'll break it down step by step and show you guys exactly how. Actually, I don't want to remove that. Let's just remove all of the drawings, okay? So price was previously at this area, and then it had a hard time breaking this area. So, and then once it broke this area right here, that's when we saw it test this high, right? So the market always works in these levels. It always tests previous highs, previous lows, previous structures. It's always doing this over and over and over again. So that's how you can able to determine where price is going to go most of the time. So then we look at this and okay, confirmation. Well, where's price probably going to go if it's already did that? It's going to test the previous low of that, or that previous structure that it first broke out of, which is here, right? And then guess what it did? It did the same exact thing. So then now we use these indicators, these moving averages, just to see if it's still sustainable for the upside momentum by seeing a retracement at the moving averages. So we see a retracement now at this moving average. So now we can apply this and use this to now put another buy order, right? And what are we going to do? We're going to look at previous price, and we're going to see where structure is probably going to go to. So we're going to look at it. Oh my, you know what? Price looks like it's probably going to retest this October's highs. So let's see where price does. And guess what it does? It always does that again. So then you see the consolidation once again, because like we talked about, the market consolidates 50% of the time and it trends 50% of the time. So then now, and you can use each one of these bounces as a buy order, right? And the thing about this is that it just takes a lot of practice, right? This takes a lot of practice because, sometimes it might be, hard, especially if you see a drawdown in this area after you're already in profit. You wonder if the price is going to just fall back down and break your previous low. Well, you're not going to think that way because you already know that there's going to be a structure behind this. So we look at previous lows and the high of that market, and we see that the market has a firm structure after this first leg. And that's where you can find confirmation that it's still going to be in a valid uptrend. Looks like a V formation. Are you in this pair now? What made you enter when you did it, and why? So I'm in actually the USD JPY, but this is not the exact reason why I'm in this pair. I'm showing you guys how to catch the breakouts and trends. So I'm going to get to that, and I'll show you exactly why I'm in this trade. It's actually the same exact reason why I'm in this pair right now. I'm just going back in previous market structures to show you exactly how I determine when and get in and out of my trades. So, whoops, sorry about that, you guys. So, moving forward, when we see that these areas of support levels of this moving average, then now we can define that price is now still in a confirmation of uptrend. So we look for previous structure. Previous structure is now been confirmed, check mark. So then now we want to look for that drawback, because obviously after, just like all of these, when the market tests, it has a drawdown. When the market tests, it has a drawdown. So it has a drawdown on a micro and a macro perspective. So I'm going to embrace all this stuff at this point. I'm going to move forward. So moving forward, it's the same thing. And we're going to go, actually, Jill, we're going to go over exactly, sorry, if I yeah. So I'm going to go over exactly how this is how I established and got into this position as of right now, okay? So we saw that, same thing. W formation once again, market broke up. Test the previous lows, we already got it. So same thing again, market has a peak formation high. Now we're looking that this was, the beginning of November. So this was the high of the month, confirmation, right? So then now we're going to use this as a stable ground to see that market's probably going to retest just like it did before. So that being said, we see the same retest levels as of right here. So market comes down, right? After you see a confirmation, just like we just said before, then it retests. And then now we want to look for another W formation, which we do. Another W formation is formed. So we're able to take these W formations and now form them and use these to now make profit, right? So now we can see that this is, the market is now going to, there's too much pressure to, I know that market isn't going to break. It's not going to go up any higher. It's already made its move. And the reason why I'm looking for a bearish momentum now is because I can see that this high and this high was already formed. So I'm not going to go against this and go higher, because I believe that price isn't going to have, there's no more reason for pressure to be built up that way. They want to, right, build up consolidation, build up price, but there's no reason why price is actually going to break this area anymore. So we're looking for a reversal, right? We're looking for the opposite. We're looking for a bearish trend. So that's why I took this position. That's how I took the USD CAD and the same thing on this position as well. When the market made the same formation on the 15-minute chart, and I kept on seeing the same thing when the price came up, broke out, made that peak formation, had that buy confirmation, made that huge bullish momentum, made that peak formation once again, then drop back. Like we talked about, confirmation where the market likes to break out, it loves to retest. So market breaks, retest that same level, and then tries to retest the same thing. This level had to retest that level once again. So once we saw that, oops, sorry about that. So once we saw that area, now we can see that price is going to move and test this level, and now we're going to see that retracement. So this is the most important thing, is that when we find these areas, when we find these support and resistance areas, we now know that market price is going to move higher and lower. So, whoops, looks like there's something that happened to my chart. Let me just fix that real fast, you guys. The interval state has been messed up. Let me just get back to this. Perfect. Okay. So I hope that answers your question on why I get in and out of the positions on the market pair. So, and if it doesn't, I hope you can put in the questions. I'll answer any question, you guys. If you don't understand what I'm saying at this point, please, I want to refresh your mind if you don't understand this stuff, because it's really crucial information. Because once you find these areas of finding the lowest low or the highest high, then you're able to now define, a really good trading strategy that has really good risk to reward. So when, making this position right here, we saw that the same thing happen, right? We're on the daily chart. We can use every confirmation. Once again, see a W formation, market comes up, wants to break out of the same area that it retests, and then now moves higher, right? Same thing. Market breaks out of this area and then draws back, does the same thing, makes a peak formation, and then now moves higher. So it just happens over and over and over and over again. So the reason why we're in this position, same thing. Market structure makes peak high. Then now we're seeing that this is probably going to be the high of the month. So we see that this is probably the high of the month. This is a retest of that high. And then this is the correction part of it. The market corrects itself. We see that the market is now testing this area, right? Making this false W formation, probably test this high, and then we're going to see a continuation of that downtrend. So that's how we're looking to find these different areas of support and resistance, looking to find these areas of when the market is trending, where can you buy and where can you sell? It's by using these W and M formations, looking at previous structure because it always leaves clues, because it always likes to retest. Because when you see that retracement level, just like we saw this retracement level, where the market retests that same level that it broke out of, we know, and it's confirmation that now it's a buy, right? So you guys, this stuff is, every single day, right? So I look at this stuff and I'm always still learning it every single day as well. So, we're not always going to be correct on every signal we give. We're not going to always be the best at it, but we're going to do our best by giving the value that has been created and then maximizing on that and using that to, define the market to sell. So, this is just a formulation that the market is moving under, and how it moves is pretty easy. So that being said, you guys, I'm going to show you guys why areas where not to do the M and W formations. Okay. So before I do this, I want to make sure that you get all your questions have been. So does how long you want to hold the trade affect what time frame of chart you want to look for? Okay, so perfect. That's such a good question. So I look for 60. So as an intraday trader, so if I use the 15-minute chart, right, I'm looking for a position of maybe 60 to 90 pips to maximum, right, for my M and W formation strategy. So that being said, I take my entries at the 15-minute chart, and my execution, depending on structure, I either look for where structure is first, because I want to look. So what I did to map out this trade is that I want to see that where is previous structure. As we can see, this is the two highs. Now that this is possibly going to be the first resistance area, and then obviously this is going to be the second resistance area. So that's why I have my take profit at the second resistance area. So this is obviously the first area right here. We're up right now, I think it's like 40 pips. And then obviously it's going to come back, retest, and then make another low. So it's going to be a little higher. So I've been holding this position for a little longer. So this is more of a swing trade. But if we're looking from an intraday or a daily perspective, we want to look at and test, say that we were to see this position, formulate, in that day. If I'm taking this W formation, first I'm going to look for that confirmation at that high. First I'm going to obviously look for structure, make sure that there's two lows. Then I'm going to actually zoom in so you guys can see it better. Sorry about that. If I see structure, obviously is making that W formation, and I see the moving averages come together, then I have confirmation that W formation is probably established. Then I want to look for confirmation. My confirmation probably be when I see that retracement, and then I don't see it break that moving average, so I know it's going to go and be in a buy position. So now the market is in a buy position, and then it goes up. So where would I take my profit? You can either take it at this previous high, because you're going to have that consolidation area. So as you can see, if there isn't a lot of consolidation, you can just have a trailing stop and not worry about it. But there is going to be a correction. There always is a correction. So this is where previous structure was, right? This is the resistance area. So this is where the market made that information. So it comes back into that same area, and then the correction is established. So, between here and there, usually I'm looking for 60 to 80 pips on this correction leg when I'm doing the M and W formations, but sometimes you can do 120 to 140 pips. You have to just look at structure and look at how it's defining where it is compared to price, and that's how we're able to maximize and see where the next exit point is. So I hope that answers your question on finding different areas. So on the day chart, mapping out trend, you're looking for highs first, then lows, highs, to tell if the market is reversing trend. Kind of, Michael, that's a good question. Actually, I'll answer that. So the way that I look for the reversals, because I tell you guys I'm a reversal trend trader and a reversal trader as well. So when I look for, whoops, keep on doing that. When I look for that, so say that we're on the daily chart, Michael, and we look for price, all we're trying to do is look for that peak formation. Because that peak formation tells you everything. It's always happening. This is literally, you know, we have a micro bullish trend, another peak formation. We have a bullish trend here, then we have a peak formation. It just happens over and over again. When the market makes these peak formations, that's when we're looking for the reversal of price. So as you can see here, the market makes that peak formation once again on the low, and then it makes that second leg, and we know that it didn't break. This is so important, you guys. It doesn't break that low. If it doesn't break that low, that's confirmation that now we're going to look for buys. So that's how we look for these different entries, because the entries are established once we see that the market isn't going in that direction anymore. It's going the opposite direction. So I hope that answers your question. And it's really important because right here, the reason why we're obviously, you know, we're not considerably fully in a in the reversal of this USD CAD, right? We're not necessarily saying that this trend is possibly going to do the same thing, but it is looking like it's making a peak formation, right? You can see that first shoulder, right, already over here, possibly the second shoulder here. So we can see that this is obviously an area where the price is inducing buyers. Then now it's going to reverse it on them. You know, it always happens over and over again. That's what makes swing highs and swing lows, is because people buy, they either are waiting in the trend, and if they don't, they get stopped out. People buy, they wait for the trend, maybe they don't, they get stopped out, and then they buy again. So these retracements are usually when some people are getting out of the market. Their stop hunts, their stop hits are being hit. That's why when you see these huge levels of trend, or sorry, not huge level, a huge momentum when the market just plummets really fast, this is all the proprietary traders, the investment bankers, really pushing price very quickly. Because look, they always take more time driving price into one area. You see how it's consolidating for a good amount of time. We'll see exactly what we're looking at here. So we can see that consolidation from this peak low is May of 2016. And then we see that price is now hit this area to April, or excuse me, we should say May of 2017. So it gave you basically a full year to buy, right? So it gave you a full year to buy and go long on this area, right? So we'll do a counter trend and show you where people were stopped out. So then now people think that the market is going to go higher, right? So people now are induced into this long position. And then in about a quarter of the time, they take all that profit back. Just where it started, you guys, excuse me, just where price started, that's exactly when price ended. And then if you look at it, from the day it started was basically June 21st to July 28th. So it took about a year to consolidate price, to build it up to this level, and then in just 1 month, they took back all those buyers. So that's why it's called market manipulation. It's called market, it's just inducing a response. And that's why market psychology is so heavily integrated into how we trade, is because we use this market psychology to define when the price is going to go fast or when it's going to go to slow, or how long it's going to take. And sometimes it builds up a lot faster, and sometimes it builds up a lot slower. All of it's based off human psychology, and you know, human psychology drives market orders. Market orders drive positions and price. So then it's just correlated, integrated in all together. So that's like a huge, it's a big thing. This is actually the biggest thing that I got to learn, because when I started trading, you know, I would obviously get into positions and I wouldn't see the end goal of it. I didn't see if you see a broadened perspective of how the market works, now you can now integrate your strategies to work. And the way that I'm teaching you guys is basically how the proprietary traders are looking to, get in and out of the market. They're looking to induce a lot of traders into a buy or sell position, and then they take it back, just like you guys see here, in a quarter of the time. So when we're looking for trend, we're just trying to find those lows. So we can see that if this is the peak formation here, and we'll even do it on price as of right now. We can do it on the 15-minute chart, and we'll see exactly the same thing. Market makes a peak formation, comes down, now it's retesting possibly that breakout area right here. We might see that correction from that upside before we see market now go down to our take profit, right? So it's all about having these formulations and being able to, maximize from it over and over and over again, right? And we do use the psychological levels again to be able to have that resistance and support as well. So do you use all range for entry for day trading, entry for setting targets? Let me see if I read that correctly. What do you mean by all true range? I'm trying to figure out what exactly that means. So are you talking about the range of the day to enter into the market, or are you talking about just the overall range in the market in general? So each currency pair has a range that it goes through on a daily basis, right? So I'll show you guys exactly what it looks like. So each pair on the market has a range. We're a little too close to the screen. Okay, so when we're looking at these percentages, this is each session, but I want to show you guys the pair of the days. So when I'm looking at, so these are the currency pairs that I trade, right? So each one of these days has a range. These are pips, right? So each one of these days has a percentage of pips that it usually average range, right? This isn't like completely accurate, but it's just a overall structure of what price usually does. So when I look at this, I now know where the average range of that day is. So when I look at this, I'm like, okay, if I'm trading Euro USD, today's Wednesday. We're trading USD CAD, so let's look at USD CAD. All right, USD CAD, today's Wednesday, so we're looking probably at 106 pips. So now we're going to go back to USD CAD and look if that is considerably having more confirmation. So yeah, I mean, the day before, previous day, right, on Tuesday, we look at price, the USD CAD, the momentum is is less, right, is less. So the Sundays are very low consolidation days, right? So this is also going to be available, when the program's ready. So it's going to have all these percentages to give you guys. So then once you use these percentages of how the market is basically formulated, then now you can break it down into what currency pairs have, what daily range are they looking for. So not only can you maximize your potential and profits by using the daily range, but then now you have what we're talking about, the structures and learning how to move with the market, and then knowing as well these ranges, it can give you a huge confidence boost on how you're able to enter and exit your trades, right? So I hope that answers your questions on what the market works. Oh, so I don't use that indicator Michael. I haven't used that indicator before, the ATR. So I hope that understands how I do it personally. So I'm not really an indicator guy, you guys. I really use like basic, simple structure and support. I try not to overcrowd my charts with anything besides the moving average indicators. I know that a lot of people use a lot of moving averages or different indicators and oscillators, but I really keep it simple. And the reason being is that I read a book called Naked Forex, which is a really good book to pick up, where they teach you how to do price structures without any indicators at all. So I was able to now use that because I used to use all these other indicators, but I wasn't making any money. So I'm like, why am I using all these indicators? I'm not making any money. I've used signals. I've done like a robot, like an algorithm robot. And for some people it works. Like we have a trader here, Raphael. He kills it. He's like a really good crypto trader, and he knows what he's talking about, and he has an algorithm that freaking makes profit. So it's like there's some people that know how to do that. For me, I'm just really I would say I'm a country boy when it comes to trading. I keep it very simple. Like I try to just look for, the fundamentals, and I don't mean by fundamental data, I'm just talking about like the fundamentals of what I'm talking about, like all this stuff that I'm going to be going over in the markets with you guys, and all throughout these live streams. I basically just use this blueprint. Each one of these things is exactly how I trade. I look for midweek reversals, just like when I mean by midweek reversals, it's pretty self-explanatory. At the midweek between Wednesday and Thursday, the market likes to reverse. I'm usually at the 15-minute chart, and I look for psychological numbers to hit this area but not and reject it. So then now I look for a reversal at the area. So if we go to price, we can look at, this was basically the reversal happened, on Wednesday, which is today. So that midweek reversal was established. Thursday, we possibly might see that it's still going to be on that same valid midweek reversal. And then I looked for areas to make that confirmation. So I use this blueprint right here to basically get in all of my positions, because I try to keep it simple. Like, it should be very simple when it comes to trading, because trading in general, it's essentially to keep on making sustainable profit over and over again. Even after you have a drawdown, term, you lose for a week or a month, you just haven't been able to hit your signals. It's about having that consistency over time, and then obviously risk management as well. So it's a business. So you got to be able to go through the storm and be able to survive. And to be able to do that, you're going to have like really basic techniques. You can't have like all the craziest, things, because you're just going to be, I mean, for me personally, it's just, I just get too flustered. My mind is just too much. Why am I trying to over stimulate my consciousness when literally it's just keep it simple, right? Just use the path of least resistance and just keep most of the things very simple. So that's how I get into the entries and how I'd be able to find the markets. Perfect. Glad I can answer your question, Michael. Thank you so much for that question. Really good questions, you guys, today. You guys are literally killing it with the questions. I really appreciate it, because now you could always know if someone knows what they're talking about if they can basically ask the question or answer it. So it's making me have confirmation that I'm teaching this, but I'm also it's ingrained in my mind, and I actually can answer the questions that you guys are giving. And these are really good questions. So I love it. So that being said, you guys, that's pretty much the blueprint of how I find breakouts and trends. So I'm just going to go back, because I am a guy that kind of goes back and forth on things. Like, I'll start one place and then I'll obviously come back to it. So just so we understand, and so it's super simple, the way that I find where to buy and sell at a trend, because this is a reversal. Don't look at this as a way to do this. This is a reversal. I look for confirmation when the market is already trending in that direction, and I look for either W formations, or I look for retest at the 50 or the 200 moving average. Okay, so that's usually how I find my buy or sell entries. So for selling, I look for M formations, right? For buying, I look for W formations. Excuse me. So right here, right, we're still in a bullish momentum, right? This is just a correction leg, and I can already tell you guys now that even if I didn't see that this was previous price, I could already say that, oh, this is probably where previous structure was. Oh wow, it was the area where previous structure was. Okay, made that not necessarily peak formation, just had a really high formation, and then now it made that low formation, and now I'm looking at that swing low, right? At the swing low, so we have a higher high, and then we have a higher low. So after we see this swing up, we want to see that correction, which it does. I see confirmation. I see 3 confirmations. I see it test previous structure. I see it not break this previous peak formation, and then now I see it now having structure at this previous high resistance, right? Because now resistance is now support. So then now I'm looking for a buy position. So then I look for the second leg, right? You don't want to be too hasty as well, you guys. You got to be very patient. Trading is about being patient. I learned from my mentor that, it costs 0 money to be patient, but it costs everything to be impatient. It costs literally so much money when you're FOMOing and you just don't, if you miss a trade, you didn't make any money, but you didn't lose any money. That's the thing. Like, you got to be willing to just not even if the position goes in the direction that you that you want it to go, it's better off if you don't feel it, the vibrations, don't take the trade. You shouldn't ever trade scared, then you're just obviously gambling at that point. So then you start to see that this area was the structure. So then once you saw that break and you saw that retest, this is a buy position, right? You could already bought it here because you already know that the formation is a W formation. And then you're looking for, possibly that next area of to exit your trade. If you're obviously this is a day trade, you guys, right? If you're looking to exit that trade, you're literally going into one position, out one position. This is basically the end of 2006, the 26th, and then obviously the beginning, early morning of the morning. So you're getting in and out of these trades, and then you see that retest, and then you're waiting for another confirmation where it broke this previous high, but then a retest that area. So now you're going to look at previous structure again to possibly take profit, right? So you look for a psychological number first. So 13200 is fine. 133250, 133200. I would have took 133250 just because right here it's 132500. That's where the breakout was. So I can see that this is a perfect buy order. And then I look for previous structure. This is the high of that last swing high. So then I'm probably going to exit this trade here because I'm already seeing that it's making that peak or that retracement candle, right? So here is a little different, and I'm going to teach you guys this. This is probably the last thing I'm going to talk about. So I hope first I'm going to answer any questions you guys have any at this time, and after that I'm just going to go forward. So how long do you hold your trades? It depends. So how long do I usually hold these positions? Is pretty simple. I can hold them for about 6 to 8 hours. I'll hold them for about 3 hours, depending on the market, what structure gives me, right? Because it's not the hours that I'm holding the position for, it's the structure that's showing me. So I'm showing you that I don't really worry about the hours of how long I'm looking to hold that position. I'm just looking at the structure of price and where it gives me, or I'm looking for another psychological number to get out of my position. So like when I'm looking at these simple areas, they will define how long it's going to take, So but to roughly estimate on my back testing, it's basically like if I'm looking for a W formation, I'm basically this would be like 6 to 8 hours before it's going to hit like 60 to 80 pips. Depends on the day too, you guys, because you got to understand that the market moves at different areas, right? So what I mean by that is that the market is actually having different percentages at different time zones, right? Or different sessions, right? There's 4 sessions in the market. I only focus on 3. There's there's Tokyo session, there's Sydney session, there's London session, and then there's New York session, right? But the most compatible and the most profitable and the most volatile sessions are always London and New York session, right? So the London and New York session for me is early in the morning till around 9 o'clock Pacific Standard Time. So I'm up really early in the morning. Sometimes I will sleep the next day like around like 4 o'clock, right? So my sleeping schedule is pretty screwed up. It's a little different. So that's how I was trading for the last basically year and a half, right? That's where I was able to make the most profit, by having a sleeping schedule that was a little different, where I would trade the London session and the New York session, and then I would basically sleep 4 to 6 hours during the day, and then I would be trading the market. So it was a little different. Obviously I didn't have like a social life, but to be successful in anything, you're gonna have to give up the meaningless stuff that we think is meaningful to us. It's just a part of the blueprint into being in any success in any field. You have to sacrifice. It's just how it is. So like when I look for to answer your question, is that I try to look for 60 to 80 pips. Sometimes that ranges between 3 to 6 hours. Sometimes it's a little longer. If I see a M formation or a W formation during Tokyo session, I know it's going to take longer, because Tokyo session, or we can call it Asian session, is usually the consolidation session, where it doesn't have a lot of volatility. And same with Sydney. It's not until the end of Sydney session going into London session we start to see a pickup of price, right? I'll tell you guys, for example, this happened, this whole thing. So if we were to go to price, most of these drives happen super early in the morning, like London session, because London session is the big house of forex trading. Proprietary banks, HSBC, Berkeley, and so forth. They have most of the biggest proprietary investment companies for trading in the forex market. So they have a lot of maximum gain. So that's why a lot of moves are made when we least expect it. But now that you guys know that, when you should know, it's usually during, when you mostly should expect it now. So I hope that answers your question on when I get into my positions and so forth, on why I take the positions I do, and as well as why the markets do, what they do, because the markets are always going to do what they do. As you guys can see, perfect example, this is where we're able to make another position, right? Because if you're thinking about it, market is already made that break low, right? Now it's testing now the 50 moving average. And if you guys look, we're only looking for bearish momentum. We're only looking for bearish trades. So we're going to wait for confirmation right now. As you can see that it's at 13,550. So if we see price test and not break this level, which is going to be roughly around 136.50, if not 133.700, excuse me, then it's a confirmation to get another sell entry, right? So this is how you can compound your trades. We have one trade open, then we can get another trade after we find confirmation. I'm not going to get into the trade now because I don't see the formulation yet. It's just showing me a huge wick, or a huge it's showing a micro W formation right here. So like, we already know that price is in a downtrend. I'm not going to go against trend right now. I'm going to wait until I see possibly, that retest before I start to see. And then I also take in consideration, now that it is Wednesday going to Thursday, I'm going to start to see a market reversal to the downside, right? To really get all of these people that were in the market for the buys, I want to see them now exit the market. So these people precipitously in the box. So that's why I have my first, that's why I have these levels. I have structures to where price moves, because each level basically is going to have a consolidation before it breaks. It's not going to just usually pile through that. And if it does, it's going to be during London session early in the morning. It's not going to usually just have just straight through like butter and slice through all those support and resistance. The only time you do see that, right, this breakout, this same area was during London session. And if you look at price, this area right here, and then the same thing right here, consolidation. And then I remember it was that morning, right, or that early morning, you had that break up to that upside to retest this high right here, right? And then now what we're looking for is to have market price that has been built up from this area right here and this area right here, previous buy orders that were right in the market. We're looking to now stop them out completely by driving price. Because think about it, that's the only way proprietary traders are going to make their money, is by getting all these people that were entered in the market and swing trading or holding their positions for a long period of time, buying and selling, doing really good, doing the W formation, right? Catching that, and then sky. I mean, this is huge. I just want to talk about this real fast. Like, this is huge. Like, look at the pip range. If you were to took this trade from this low W formation, caught confirmation here, bought here at that break, at that retest, and then you didn't see too much resistance at that previous structure, and you would have just held that position for basically another day, right? Because this is basically all in a 2-day span, right? Between 24 hours. I mean, Jesus, if you're doing a mini account, it doesn't matter if you have a $5,000 account. If you can do, a mini lot, even a micro lot, and if you compound, you have 3 buy positions, $3 a pip, you're making 300 pips. You guys, you're going to be doing very well over a time frame, right? You're not looking for home runs. That's why a lot of people ask if if I just look for the huge breakouts, is that no, I don't, because home run hitters, always usually have the lowest batting average. They can hit it out the park, but only sometimes. You want to have consistency, and when you're definitely in this business, you need consistency over time. Like you can have, I'm not always profitable. Sometimes my strategies aren't working. Sometimes, I make silly trades and so forth. But over a year or 2 years, you want to be able to look back at your books and be like, okay, I understand now. That's how I'm able to trade. Because you just look at your failing trades as learning lessons, as signals, as indicators. Because now you know how that worked. You can use that, strategize that, back test that, and then learn over that. That's how I made literally all this stuff was basically just notes for me on basically all the stuff that I previously lost money on. I just why I was like always wondering, like, why does the market always reverse on Wednesdays and Thursdays? Why does it just keep on going? Why are these things called zone hopping when the market just literally spikes up out of nowhere and spikes and gets to another area? What are these M and W formations? Why does the market always retest and then reverses? I was always like wondering, and then after I did that and I back tested this information, you come up with a strategy, and then that strategy over time should keep you to have possibilities. So yes, I used to MetaTrader 4 for my trading. Yes, that's correct. You can integrate your accounts with TradingView as well if you just use MT4. I mean, I have it on my phone as well, so you can do either or. Whatever is best for you. I don't trade on my phone though. I'm not really big on trading on phones. I've had a bad experience in the past with trading on my phone. It looks pretty, it looks luxurious, but for me, I don't need to prove anything to anybody. I'm not here to, try to look fancy. It's not for me. I really would, I wouldn't blow my account because, I've learned so much strategies, but I would have, a lot of drawdown time and a lot of like bad trades if I were to, just have it accessible on my phone all the time. So, depending on your guys' discipline, everybody's different. For me, the discipline's a little different than other people. So if you have that discipline, you like trading on your phone, or if that's the only compatible device you have, yeah, of course, trade on your phone. There's nothing wrong with that. I know a dude that's making, like I think 30 grand a month right now, trading literally USD JPY on his phone. Like that's all he does is trade USD JPY. He's making, $30,000 to $40,000 per month, literally just on his phone, traveling the world. Like, great, awesome. I'm super happy for him. But for me personally, I like to be on a computer. I like to have my setup, and I like to just, be in a comfortable environment. I don't want to be, like out and about. I like to treat this like a business more so than something that's like for the gram or Instagram, I should say, or for like social media. I like to treat this more so as like a structure. It's awesome though, because this trading gives you that freedom, right? Once you understand a strategy and able to now like apply the strategy and make profit over time, then now you can use this and go anywhere you want in the world and be able to make money, right? And that's a lot of people's dream, is to use this wealth cycle or a wealth machine to now be able to do things that they can never do because their job wasn't giving them time off, or it's not always about the money. Sometimes people are making really good money at their job. It's that they just don't have the freedom because they're working all the time. So having that sustainable, or every millionaire has at least 3 strands of income, mostly 5. When you have that other strand of income, then now you're able to maneuver and do different things. You're more flexible, and you don't have that stress of financial stress on your head, because now you have another supplement income that you do. And that's the reason why I started trading, because trading was just really important in that way. So yeah, definitely. I mean, there's a lot of people that are making that, Michael. A lot of people are making $30,000, $40,000 a month, $50,000 a month. My highest month to this date, I think it's at like 16,200. I think that's the most money I've made to this date, and that was I was actually last April of last year. So like you can have those crazy months, but I was leveraging and I was doing heavy trades, and I had like I actually took an account with a Trader's Way, and I traded that. I didn't trade it on forex.com, and they gave me a lot more leverage. So obviously I was a lot more aggressive, and this is where it comes into play, like your ego. Like I got lucky, right? Because I was heavily, I mean, I was very confident because I was sustainably making profit over time. But for me to up my leverage, the amount I did was a cause for disaster. That's why I only did it for about a month, and then obviously, I got back to my my regular routine, right? So you don't always want to go out hard. Sometimes you do got to take risks, and sometimes you do got to test your limits. That's just the beauty of life. You test your limits, but don't test them all the time, because we all know that it's not sustainable. Nothing in life, if you do it too much, is good for you. So it's just about having that polarity, having that that flow in between, knowing what is best for you. So yeah, so if you guys have any other questions at this time, please feel free to put in the comments. I'm actually going to be on the Discord group from here on out. I think I have 2 signals open right now. And for you guys that have been looking at the signals lately, we had to do some things. So make sure that from here on out, you guys just looking at the signals. I'm going to be literally doing my signals when I'm trading early in the morning. So my signals are going to be up at like London session early in the morning. So I'm sorry if a lot of you guys that aren't up at that time, but I saw that a lot of my signals haven't been coming to fruition because I haven't been doing my signals at my trading schedule, because I've been trying to integrate with the company and stuff like that. So I'm going to have most of my signals available early in the morning. So when you guys are trading, you'll see those signals if you're in our Discord. On Traders Way, B-Load good. They do not take debit card anymore. Yeah, I don't use Traders Way, and they took so long for me to withdraw that money too. Like it took like 2 weeks or like a week and a half to Forex.com is like in 3-4 days. So I've never had a problem with Forex.com, and obviously it's just when it comes to tax season, you're like capital gain tax is one of the biggest taxes and I live in California, so it's like it's huge, but it is what it is. There's always going to be contrast in life. You can't just live without it. It's just how life is, and you got to pay your taxes. So that being said, you guys, I'm going to be in the Discord group. I'm so grateful for today. I know yesterday was a little early session. I hope you guys got some really good information and enjoy some of my rants as well. And I will see you guys tomorrow. And if you guys have anything that you want to go over, something that you possibly want to see that the market is doing, then completely put in the questions. Oh yeah, one more thing before I leave this. We were going to talk about inflation. So price with inflation. So let me just actually get that up for you guys before, because I'm just going to be man of my word with that. So let me just make sure you guys understand how that inflation works and how the market is actually being dictated by, or how we see the huge market drops, and how we are going to see probably a big market drop in the US dollar in the near future. So that being said, you guys, the US dollar is actually the most powerful currency in the world right now, right? It's 60% of all central reserves of all central banks in the world, and it's the highly most traded pair and transactional in the world, right? It's 82.6% of all transactions, and it's basically priced in with oil, right? Oil and the dollar are very priced in. So the reason why that I'm talking about inflation is because knowing that oil prices are placed in with the dollar, I'm looking at oil prices. I'm like, it's crazy how I see oil being is on obviously in a drawdown state with consolidation, might even retest these previous lows, but yet the dollar is still making higher highs. So I don't know if you guys are more so, if you guys watched the movie Big Short, right, with the subprime loans and the synthetic CDAs and everything, which is credit debt obligation. It's about propping something up. So I'm gonna tell you guys this, on why I believe that the market is going to, or is having a huge inflation problem, and it's obviously not being structured correctly, and we're basically being propped up on nothing, right? So I want to show you guys this. So Donald Trump was elected in 2016, correct? So we see that, let me find this. We're on the 4-hour chart. Got to go to the daily chart. And actually I'm going to go to the USD/JPY because that's my favorite pair. So we're going to go to 2000. So this is when Donald Trump was elected, right? We have he's a businessman. He said he's going to, stimulate the economy, which he did. We have record-breaking stock prices, which we have, and so forth, right? And unemployment is down. It's the lowest it's been since early 2000s, and so forth. Interest rates are down, but we have to take this into consideration that we are on $1 trillion deficit, and Donald Trump just did a budget for $856 billion for the military. So, and we're having, obviously tariff wars and so forth, but the majority of that, most of that is smoke and mirrors, is that it's highly inflated, right? We're in a highly inflated economy. We're basically being propped up on just borrowed money. Like, our economy is not sustainable the way it is without borrowing money. I mean, that's the reason why the dollar was created, but that's a different story. But because of that, we're going to see a huge turn to either the down or the upside, right? And that's one reason why I believe Bitcoin is obviously low as it is right now, is because I feel like that's going to be a safe haven for a lot of investment bankers when the dollar goes to nothing. And that's why they probably drop price so low, is because they want to make sure all the people that that don't really have the money to lose, to get out of the market. And then once the dollar goes down, I really believe that the dollar is going to hit lower structures very soon. Is because there's always a correction. So meaning what I'm talking about is that Donald Trump was elected, but we saw that there's so much good news with our economy, but yet the dollar just, was just always lower. It's not going higher lows or higher highs. Like, we saw in 2008. Whoops. Let me go to 2008. So, whoops. Right? So we didn't see that. Obviously, we saw a different when the market was obviously stimulating, right? And because that there's going to be a healthy economy when the average income's at $100,000, which it was before the market crash, right? The average income, in the United States was around $100,000 before we had that huge, bubble. So this is basically the last leg of when the market had that, that run. But then by August, we saw it turn for the worse. So this is obviously a different type of bubble, right? Because this is obviously the real estate, bubble, but it's still very integrated to what we're talking about now, because now we're looking at a lot of things and we're like, okay, this is just over leveraged. Like, everything is just propped up on IOUs and false data and saying oh, this is this way, so we're going to basically prop it up, right? And then you're looking at the chair, you're looking at the Federal Reserve, and they're saying all these things, and I'm like, this is it's not adding up. There's something fishy, right? So I'm trying to sniff it out. But right now, what I currently believe is that we're going to see a huge correction in the US dollar in the near future. And I think that is when we'll see Bitcoin and a lot of other cryptos go to the higher, because it's a safe haven for a lot of people, right? When you see the dollar isn't going to be, valued as much, if you're an investor and you're managing people's capital, you're going to go find a safe haven. You're going to hedge your investment, right? So you go to gold, you go to other things that are going to be very accessible, So that is something that I want to talk about, is that inflation is one of the key factors of recessions, depressions, and market retracements. So and we'll talk about interest rates later on, but that's the reason why one of the biggest things to take into consideration and watch is the Federal Reserve and the institutional banks. You can forget all the other stuff, and you could go actually. Naeem actually showed me this today. Forex market. I use Market Watch, but this is way cooler. Forex Market Watch and also investing.com. If you just watch the banks and institutions, what they're saying, and if you watch the Federal Reserve and see what they're doing as well, you're fine. You don't need to look at too much fundamental data. Let me know my CE Standard Time. What time should I look in Discord? For my signals. So for my signals, Michael, so you're going to be, roughly you'll probably see them around 3 or 4 in the morning. It depends. I just got to see when the structure happens. But, I can't say that most of my entries are at the specific time. But, I'm trading early in the morning. I'm trading usually during the whole you know, from 2 o'clock in the morning to around, you know, 7 o'clock in the morning. So like any between that time, that's usually when I'm doing my intraday trades. For my swing trades, I can be able to do like you know, that available as well. But usually I don't want to do my swing trades, you know, my signals. Well, I've gathered to know that now, you know, by having, you know, failing signals, is that I'm not going to be doing my swing trades or my positions like midday or early or during New York session period. I'm just going to be looking for structures at that time. So you'll start to see those available, you know, earlier in the morning. So if you are an early bird like I am, you know, you'll be able to catch those signals. But besides that, you guys, if you have any other questions at this time, you'll be able, just feel free to put them in the comments. I hope you guys have a great rest of your day. I will be in the Discord group. And yeah, from here on out, I hope you guys are learning a lot of this information, and I will see you tomorrow. All right. Have a good one, you guys. Bye.